This week on Unpacked, let's have a look at one of the more recent case studies from Wall Street. It involves a company called GameStop, short selling and hedge funds, as well as a page called Reddit. Now, GameStop is a video games retailer, and like a lot of other companies, they had a hard time through COVID. Now, they'd already started their transition from a physical retailer with a number of stores to more of an online and virtual retailer. And on all accounts, they were doing okay. But there were some people in the market that didn't think they were going to go so well. There's some hedge fund managers that thought the future for GameStop looked pretty bleak, and they decided to short GameStop. Now, I'm not going to go into the specifics of shorting a stock and what that is, but effectively, if you're shorting a company, it means that you think that they're not going to do too well in the near future. And the way that you make money from a short investment is if the value of the company drops, so the share price reduces, then you make money. And the more it reduces, the more money you make. Now, it's quite a risky proposition, and one of the main risks associated with shorting investment is there's no limit to how much you can lose. So if the share price actually goes up in value, you start losing money. And the more and more that share price grows, the more and more you lose. And because obviously a share price can grow as much as someone's willing to pay for it, the losses can be infinite effectively. So what happened? The hedge fund managers, a number of them, took a large position as a short against GameStop. Now, they obviously want to see the share price go down because that means they're going to make money. Now, there's a number of investors that actually thought opposite. They thought that GameStop were going to do okay. So they're just your normal investors that said, yep, I'll buy some shares and hope that they continue to improve. However, there is an online community called Reddit, and it's a social forum. And there's a certain page in this forum called Wall Street Bets. And it's a lot of traders that put their opinions out there to the public, and a lot of people like to converse on this webpage. Now, they all got together, caught wind that people were having a huge short position on GameStop, and they effectively made a pact and an agreement together that they weren't going to let it happen. They weren't going to let these fund managers push the price of GameStop further and further down, so they all agreed to start buying it. Now, the way supply and demand works, if there's more and more demand, but only a limited supply, then the value of it goes up. So a lot of people on this forum started buying GameStop, and it grew in value astronomically, thousands of percents. It went from the low double digits in value, $18, something along those lines. That's what it started to get towards, into hundreds of dollars per share. So it was a huge growth. And what happened was, because as I said before, people that short sell lose money if the price goes up. Very quickly, these hedge fund managers were losing billions and billions of dollars. So it's a really interesting scenario to see it play out, and it's starting to come back down in price now, but it was a really interesting case that short sellers, people that you could argue manipulate the market on a regular basis, were really unhappy about the fact that Reddit also decided to manipulate the share price, although it didn't work in the favor of the short sellers this time. So it was an incredibly interesting scenario, and it's effectively shown us that we've opened the doors now. This can happen again. So it's really important that you know what your investment strategy is and not take on levels of risk that you're not comfortable with, because these sorts of things can happen. This market manipulation can continue to go on.